All right, so let's start with crash 5H. Okay, you can imagine how it's crashing down. Now, first things first, this was why this signal was given. There was a serious demand, or let me just use terms which you understand clearly. We have a resistance at this point, and you get to hear me use the word or the term other blocks and all that most times. It's one of those concepts that work so effectively on boom and crash, and I'm trying to break down crash 500 signal. When I gave the trade, it was given based off this level. I could remember last night someone on the platform actually did make mention of this point and how he closed early. Now, there is something you guys need to understand when it comes to trading boom and crash, especially when you're trying to use the smart money concepts. Smart money concepts involves things like supply and demand. Other block is just support and resistance. Let's just keep it simple, right? I'm just try muting my product. Thank you. All right. So it's basically supply and demand. I really don't want to see your faces. Thank you. So just mute your mics and then. Okay, so it's basically supply and demand. And then this was the first point. Now, when you want to mark a supply or whenever you want to mark a demand zone, all you have to do is check. Is a resistance broken? Is a support broken? So in this case, let's start from this point. Let's start from analysis of crash 500 from this point. Now, this is a resistance, quite all right. Let's just mark it. All right. Now, having this resistance, yes, but before I do that, let me show you guys something so that it's gonna be easy for everyone. It's just a rough sketch as to how this trade was taken this afternoon, and let me use this. Just give me a moment. All right, so whenever price is doing this, make a series of lower low, lower highs, lower low, lower highs, lower low, lower highs, we can clearly say we are in a downtrend. All right, so just have it in mind. Now, the basic thing you should look out for is look out for whenever we are in a downtrend. First things first, the number one thing you should look out for, just in case you're writing, is a support, is a previous support being broken. And so we started off this downtrend from this point, came down, up, down. I'm just trying to draw it again. Now let's count how many supports we have. We had this support, we had this support, and then we have this support. All right, so basically 1, 2, 3. Now, for a support to be a support, it means a resistance has taken it out. Let me explain what I mean. Whenever you are in a downtrend, before we can mark off zones where we intend taking quality sales setups from, we need to see that previous support being broken. Please try muting. All right, so sorry for the distractions. Just try helping me by muting your mic so that it's going to be a smooth class. Okay. So whenever, let me start off again. We are in a downtrend, price coming down, going up, coming down, going up, coming down, going up, coming down. All we need to look out for is the support that was broken. That's all. When you have identified those areas of support that was clearly broken, all you can do is, where did the break of structure emanate from? Where did we start this break, this support that was broken? It started off from this impulsive move here. This support that was broken, it started off from this impulsive move here. And then this support that was broken, it started off from this impulsive move here. So the first things first you need to understand is identifying how an uptrend structure looks like, a downtrend structure looks like. I'm not talking about the spiritual whatever I intend teaching you guys. No, we are just trying to do a trade review as to why crash 500 and why crash 1000 reacted off those levels, so that just in case I give a signal next time, in as much as I'm so much concerned about the money management, these lessons which I'm teaching you enables you to still take quality trades or probably extend your risk, because we already know that price by a 70% case is going to react from those levels. And so let's do this again. Price is in a downtrend, going upwards, going downwards, going upwards, going downwards, going upwards, going downwards, going upward, going downwards. All you have to look out for is the support that was broken. You draw a line. Let me show you this and this. Now you're going to draw a line or a zone marking that level. All right, take note of this, it is very important. Marking this level, then marking this level. Now after you've done this, the next thing you want to do is where did this break happen from? This break you see here, where did it happen from? This break you see here, where did it occur from? And then this break, this final one you see here, where did it occur from? All right, so where did this break start from? So for this first support that was broken, it started off from here. This impulsive move was what led to this break. This second support that was broken, this impulsive move was what led to this break. And then this point that was broken, this impulsive move was what led to this break. Now, this is where it gets interesting. Whenever this support level, a downtrend has been broken, right? Whenever those levels has been broken, all you have to do is mark off those zones that led to the break. So let's start with this first one. You mark that zone. Now we'll talk about the other blocks anyway, but let's start off by marking those zones. One, and then we mark this other zone, and then we mark this order zone, and then we mark this order zone. Now, the reason why we are marking these zones, I wouldn't just want to stress you or give you the analogy behind why this happens. It's probably may take our time, but whenever a support is broken, mark off the resistance that breaks the support. So let's just write it somewhere. Whenever a support is broken, all you have to do is mark the resistance that led to the break, okay, to the break of the support. I'm going to show you live examples, so just follow me gently. That led to the break of that support. So whenever a support is broken, because why is this important? Whenever a support is broken, the resistance that led to the break of that support, price can always or may likely come back to that level. It's most times called a footprint that the market leaves for us, because price would want to go back to where it originated and then continue its move towards the downside. It doesn't happen always, but it's certain to happen. All right, so this is what happens. It's a long lesson. It's a long lesson, but I'm going to keep on breaking it down for you guys so that um, you get to the level where I get to in trading, where you can just look at the chart and then know what is going to happen. All right, and then the only thing that differentiates you and I think at this point should just be the money management. Right, so let's start again. We have a downtrend. Now, why a downtrend is a downtrend is because the support was broken. When we have support continuously being broken, it is a clear downtrend. And so let's start off by marking those zones again. Remember, you have to mark them. You have to mark them. You have to mark them. So we are marking all the support that was broken. I'm just trying to repeat the process so that you make sure it's understood. I need the lesson to be driven home. And then now, so let's start off with this. Now, this first one, this is the point where the support was broken. Which resistance led to this break of the support? This. So what happens is that, remember also, so let me just, while we are on this, take a look at this. Let me just show you this. Then, okay, let me do it here. Let me do it here. So we are going to make these candles red color. We are going to make them red color. So this is more like a bearish downtrend. Remember, when the market is moving downwards, we have series of, depending on the color you're using. Sometimes I use blue, no, that depends. But basically, so I hope you understand what I'm doing. I'm just trying to use a pictorial example in the meantime before we look at live chart, and then we finally break down. I just need one person to confirm he or she can see my screen and you can clearly hear me.
I can hear you.
All right, thank you very much. All right, so now These are all bearish candle in a downtrend. So what you do when you're marking off zones according to the rule of order blocks, let's just keep it simple. We are not really trying to talk so much about this institutional. No, I've noticed over time that it works so well on boom and crash. Notwithstanding, I'm just going to make sure I teach it in the most simplest way you can understand and then avoid. So for our bullish candle, we use the green. Now, what zone are you actually marking? The last bullish candle before the bearish candles that led to the break of this support is the zone you're going to mark. All right, we'll go to live charts to see examples. The last bullish candle before the bearish candle, the last bullish candle could be here, could be here, could even be here. All right, so this is where the order block concept comes in. The last bullish candle before the series of bearish candle, all right, that led to the break of this structure. Okay, so example, in this case, let me just do this so that sorry, I'm trying to, all right, so you see this particular support that was broken. This is the last bullish candle. So in this case, we are going to mark off this zone as the order block. I know some of you know this, but notwithstanding, I'm just doing it for the purpose of those who probably might have tried to get a grasp of this concept but don't understand. So, but basically, what we are marking whenever we are in a downtrend, probably the part two of this course is going to teach how to actually confirm that we're in a downtrend. The just prayer I'm going to have all the time so that I have a lot I really want to share with you guys. So there are schematics for confirming if we are in a downtrend, and there are schematics for confirming if we are in an uptrend. It's called the successful retrace and all that, but we'll deal with that. We cannot actually talk about everything in one class. Remember, this is just a breakdown review. Okay, so now we have a downtrend structure, and then these are the bearish candles that led to this break of support. These are the bearish candles that led to this break of support. We can call it an impulsive move. This is the impulsive move with combination of bearish and bullish candles that led to this support being broken. Bearish candles that led to the support being broken. So whenever you're marking your zones, because this is beyond resistance and support levels. In this case, when you mark this particular zone, as a result of the last bullish candle before the bearish candles that broke the support, price may not come to this point, but rather come back just to this point and then start falling. And you'll be like, why didn't it go back to the resistance? No, it will not go back to the resistance. Like I said, we are not trying to give, or we are not trying to delve into why this happens. There are a lot of theoretical background backing that, but I don't want to stress myself about it. So the most important thing you need to take out of this class is when first we are in a downtrend, look out for the support that is being broken, and then mark the zones or the other blocks where the break of structure, example, this support, this support, this support, this support here, and then this support here, where did the impulsive move start from? So for this particular support which you see here, the impulsive move started from here. For this particular support which you see here that was broken, the impulsive move started from here, and then from this support. And so now when we have identified where the impulsive move started from, we are now going to mark off the other blocks. All right, so let's probably now head to the chart. Now, when you mark off the other blocks, all you have to do is wait for price to tap into that zone, and so you would be having situations, sorry, so you'll be having situations like this. You can see how marking this particular bullish candle before the impulsive move, you can see how price got to that zone and then fell, then marking this also. So this is just how, or basically most times what I do, but there are a whole lot, of things, but this is more like a foundation, so it's better you get some little foundation. And so let's look at crash 500 and what happened to our money. Although I know some people secretly did enjoy this trade, but notwithstanding, it is fine. All right, so um let's zoom in closely. So without much ado about nothing, you can see that crash 500 without so much stress has been in a major downtrend. All right, it has been in a major downtrend. And so how do we now mark off our zones, and how do we now wait for entries? Okay, so most times it can be complicating, or the charts, if your eyes are not properly trained. That's why higher time frames are usually good. Let me zoom in closely. If your eyes are usually not trained to mark those areas of support, what I will advise you to do is look at the line chart. So let me just pick the line chart, and then if we look at the line chart, you can notice this. Follow me closely. A bullish move upward, downward, upward, downward, upward, down. Forget about these little regions. And so take the peak points, please. This is a peak point. Just take the peak points. They are where I can really, this I wouldn't consider this, but I'm going to, when we get to the part two, probably part three, if I have time, I'm going to show you how to also enjoy trades like this. Let me okay, so another thing you can do for yourself, if you cannot, because the reason why I'm switching to a line chart is for you to identify peak points. So whenever you switch to a line chart, you can see peak points like this. All right, you can see peak points like this, and then you can see another slight peak point here. This is beautiful, guys. It's more like a cheat. And then you can see another peak point here, another, all these ones are little peak points. I will explain how you can also benefit from that. Okay, so if you want to actually identify if you're in an uptrend or downtrend without understanding market structure, you can use moving averages. You can use our Ichimoku. You can use the 50 moving average. Let's just make the moving average 200 or 100. Let's just use 200 so that we can have a lot of data, and then let's make it black. All right, so on crash 500, we can see clearly that price has been in a downtrend starting from this point. And so all we have to do is mark our peak points, because price is definitely going to, we are going to refine these peak points by drawing their candles. This is going to really blow your mind. And so let's switch to candles now. Good. Now, when you switch to line charts, you have identified, okay, this is a peak point. Sorry, I didn't see this. Let me just. Because this is one of the few things that can help you really well. Okay, so I don't know if I'm going to upload this on YouTube, but the information here is spiritual. All right, so remember, we are taking, should we go ahead by marking all the support that was broken. Sorry. All right. Remember, we're in a downtrend, and so I'm trying to drag this. We are in a downtrend, and so we are looking for only sell signals. The only thing you're doing for me is, sir, we are trying to mark those peak point support that was broken, because if there is no break of the support, we cannot mark the resistance. So don't forget that. If the support is not broken, we cannot say this is where, sorry, whoever is coughing, we cannot say this is where the impulsive. So we have double bottom here, 1, 2. Now this structure was broken as a result of this impulsive move. So where did it emanate from? It started off from here. And so let's mark, and then let's switch up our candle. My candle color has changed. No problem. Let me just delete this. Now let me zoom in closely. Okay, so you can see that these bearish candles led to the break of this double bottom. So the other block we are going to mark is this, because this particular, let me delete this. So let me zoom in closely. Remember, I said we are marking the last bullish candle before the break of the structure, the last bullish candle. And so this was the last bullish candle that led to the break of the structure. Now, for those of you who are support and resistance traders, price is below the cloud. Sorry, price is below our 200 moving average. Obviously, these are good levels you would have possibly taken a trade from. Now, let me also show you that there was a slight break of structure at this point, because this is a swing level. And then if we mark our order block, this is the last bullish candle. Sorry, I'm trying to get it correctly. Let me mark this one also, and then let's have this here. All right, sorry if you have so much on your on the charts. I'm just trying to make it easy for you guys to understand. All right, so this is price having lower low. Sorry, let me start again from here. Lower low, lower high, lower low, lower high, lower low, lower high. We have double bottom, lower low, lower high, lower low, lower high, lower low, lower high, lower low. So this support, we have marked it at this point. This support, we have marked it at this point. So let's delete. All right, so you can see how I clearly marked the support that was broken by this impulsive move, and then how I have circled or kept a trap, the other block at this point. And then look at this, I have this break of this support and how I covered that candle, right? How I covered that candle that led to the break of the structure. And there are what we call breaker blocks, but I'm not going to be teaching that. Okay, so now let me zoom out closely. You can see that price did not really come into this zone, because this would have been a perfect example. But let's move to the one we took today. Okay, now take a look at this one, whereby we had this support that was broken, and then if we mark the last bullish candle, which is this, let's zoom in closely. Whenever a support is broken, you just mark the last bullish candle before the break of that support, because for a support to be broken, we will have series of bearish candles accumulated, or an impulsive move that breaks that support. And so at this point, this support was broken as a result of this impulsive move, right? This impulsive move. And so this is the last bullish candle. So you can see how price clearly came back to this level and then fell. All right, so did we have another support? Yes, we had another support that was broken, and then this is the last bullish candle that led to, whenever the wicks break the support, do not consider that as break of structure. The body of the candle has to break the support for it to be a valid break of structure, and then you mark off the last bullish candle and then wait for price to come back to that zone. And so the reason I gave crash 500 sell signal, though I wasn't actually looking at it from the laptop, I was looking at it from the phone, so I couldn't really see a clear picture. Else, this particular zone that was marked, you can see how price tapped where a candle wick actually hit our stop loss. Okay, if probably we had our 3 USD risk, because I think it was on $2.28, we got stopped out and then the move happened. Notwithstanding, this is also what I try to tell you: whenever you have a bearish candle confirmation that closes perfectly, you can take a continuation trade, and then you can look for imbalance and all that to take a sell trade. All right, so it's still falling, and I still presume it's going to fall probably up until this point. So this is why I just wanted to break down this, the reason why I took crash 500 trade. It's a lot, all right, because I did expected a perfect entry. Most times we get all those sniper entries, but there is something I noticed: price actually came to this previous point. Yeah, let me show you guys what's happened. Price actually came to this previous, because if you look at this clearly, this is the support that was broken, and then the impulsive move started from here. It broke this support. Now, the challenge with other blocks, you might have a lot of bullish candle, and then you're like, which one are you going to mark? Now, in the next class, we'll talk about mitigations, trying to filter other blocks. And so sometimes I use the strategy of, we are going to keep on adding positions. It's not like I really want us to risk adding positions. No, I have 2, 3 zones I'm looking out for, but I also do understand that not everyone has so much money in their account, and so I just always prefer to risk as little as we can to make so much. All right, so uh, this is where I'm going to explain, maybe in the next class, how I saw that price is going to come back to this point, because this point has already been mitigated by this point. Mitigated means price has already reacted off the major order block which you were marking, that is this particular one, and this happened yesterday night. Some of you actually on the comment section, when I woke up, I saw someone actually said, price actually reacted to this point and it was a good trade, though he closed early. Well, I think that was Father AB, that's his name on the platform. So that was actually what happened. But now price actually, because the market understands that everybody is actually looking at selling at this point, and I actually personally fell for that trap. Unknown to me that this level which we have here, price has not actually come to it. If not, would have had probably 2 pending orders, or adjusted our stop loss, or used the add position strategy to enjoy this trade. Notwithstanding, we can see price going above the moving average and signifying a potential change in trend. But the basic thing is, until these levels get broken, we are still on a downtrend on crash 500. Okay, so let's look at crash 1000. Then let's look at, someone say crash 1K is on our entry zone. Let's look at it together and see if we can. Oh yes, it is in our entry zone. Is it going to spike? We are going to see live. Okay, so let's break down crash 1000 trade. Now the challenge with some of this trade is, sometimes you see me go back and say delete the pending order? It's because, wow, so
Yes, spiked.
yes, it's spiked, and so we are. I hope my order is still active. I hope I did not delete it. Please, a moment. Let me check because I need to make money. And that was a good spike. So, oh, just one was activated. Oh, that's not good. All right, so no problem. And it's still falling. Wow. All right, so let's break down our crash 1000 trade before I start shouting fire and all that. Okay, so this is the, let's look at our line chart. First, we look at our line charts to identify peak points. All right, so you can also use your moving averages to, so there's another peak point. So you can take, now for me to mark this peak point, I need to be sure that that peak point broke a structure, and this is the support it broke. Okay, and this is a peak point that actually broke this structure, this support here. So let me, for all the support that was broken, I'm going to be using this particular one. Okay, so this resistance which you see here is what broke the support, and then if we put up our line, if we mark this order block, remember the last bullish candle, you can see how price reacted off from this point. Okay, and then this is the last bullish candle we marked, and then this is slightly advanced. Trying to break down this crash 1000 more might be a bit technical because it's both in an uptrend and it's both in a downtrend. It's having different ranging market schematics, so it can possibly be a challenge trying to mark it off perfectly. Right, but the reason why I gave this signal is because I had this major support broken. Now, when this major support was broken as a result of this impulsive move, price actually reacted to the order block that led to this, because, and then also notice that there were other blocks like stuff like this, and then you could see a small reaction there, and there's another one here. So now the big question is, okay, so we have one, we have two, we have three that led to the break. So which one are we going to use? What I personally, based on experience, is I use the equilibrium understanding. If I want to, this will force me to teach you guys what ranges are as well. Let me see if I can cover that. That's gonna be quite a lot. Okay, so the basic thing is, let me just use an illustration to explain. I'm trying to shift this. Okay, let me just give you guys something to explain where you should possibly take potential good entries from. I'm trying to shift this ahead. Okay, so we have, let's say we are in a downtrend. Sorry, I'm trying to draw this perfectly. Okay. All right, so we are in a downtrend. Why is I'm trying to get a better. Why is it behaving like this? Okay, let me see if I can use trading view. Okay. So I'm trying to get, I don't know why it's delaying. Okay. I think it's from my Skype. And, just give me a moment. I'm trying to figure out why it's giving me a small headache. Okay. I think I have figured it out. All right, so let me share my screen again. All right, so now we were trying to refine order blocks. So let's say we are in an uptrend. I think the Skype trying to share my screen is actually interfering. But let me see. I hope I can get it. Okay, let me just hide trading view. All fine. So we are in an uptrend. So we know that in an uptrend, we are looking for buying opportunities. All we have to do is, if you want to take buying opportunities, take them. There's what we call equilibrium. Now we have this level. Let's say we want to take a buy opportunity or on in an uptrend. You take them 60% towards the support level, not 50%. Let me explain that. Now, what I mean by that is you need to take trades at the example you want to take a buy trade, and then you see other blocks at the equilibrium, that is the midpoint from here to this point. So from this point to this point, we can clearly identify, let's say our order block was sitting at the middle. I won't advise you to take a buy trade from here. Take a buy trade below the 50% line. Any bullish candle, sorry, in this case, yeah, I think in this case, the bearish candle is what we are going to be marking. This is our midpoint because price is at this point, and so this is our order block. And let's say we had another block at this point. Let me just create something here. Okay. Let's say this is the last bearish candle. As long as it is below the 50 level, you can take that trade. All right, but if you have that bullish candle here, I won't consider taking a buy